This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China has raised export quotas for refined oil products in the year's first batch, consultancies said on Tuesday, a further effort to spur refinery production and capture healthy export margins amid slow domestic demand. The government has released to 4 state-run refiners 17.06 million tons of quotas to cover mostly gasoline, diesel and jet fuel exports, a volume 31% higher than the 13 million tons allotted a year earlier, consultancies JLC and Longjung said. These new quotas were granted to state-run China Petrochemical Corp., Sinopec, China National Petroleum Corp., China National Offshore Oil Company and Sinochem Group.
Oil prices are set for small gains in 2023 as a darkening global economic backdrop and COVID-19 flare-ups in China threaten demand growth and offset the impact of supply shortfalls caused by sanctions on Russia, a Reuters poll showed on Friday. A survey of 30 economists and analysts forecast Brent crude would average $89.37 a barrel in 2023, about 4.6% lower than the $93.65 consensus in a November survey. The global benchmark has averaged $99 per barrel in 2022. U.S. crude is projected to average $84.84 per barrel in 2023, versus the previous month's $87.80 consensus.
Moving on to the top news in the energy sector.
India has raised its windfall tax on petroleum, crude oil and aviation turbine fuel, according to a government order dated Jan. 2. It raised the windfall tax on crude oil to 2,100 rupees, $25.38 per ton from 1,700 rupees, $20.55, effective on Tuesday, the order said. The federal government also raised export tax on diesel to 6.50 rupees per litre from 5 rupees, while raising the windfall tax on ATF to 4.5 rupees per litre from 1.5 rupees, the document showed.
Britain said on Monday its £75 million, $90.5 million, fund aimed at helping boost domestic production of nuclear fuel for power plants and cutting reliance on Russian uranium supplies was now open for applications. The fund, announced in July, will award grants to businesses involved in uranium conversion, a key stage in the process of creating nuclear fuel from the metal. It will remain open for applications from Monday until February 20th. Russia currently owns around 20% of global uranium conversion capacity.
Next, we have the top news in metal markets.
Prices of Shanghai metals fell on Tuesday as the rapid spread of coronavirus infections and shrinking factory activities in top consumer China heightened traders' concerns of tepid demand. The most traded February copper contract on the Shanghai Futures Exchange closed down 0.5% at 65,790 yuan, $9,528.84 a ton. Aluminium dropped 2.2% to 18,270 yuan a ton and zinc shed 1.1% to 23,455 yuan a ton. SHFE nickel was down 0.2% at 228,820 yuan a ton. Tin was flat at 209,060 yuan a ton and lead fell 0.4% to 15,875 yuan a ton.
Gold prices jumped more than 1% to a 6-month high on Tuesday on technical trading, while investors looked forward to minutes from the U.S. Federal Reserve's latest policy meeting for more cues on its rate hike path. Spot gold was up 1.2% at $1,846.08 per ounce as of 0728 GMT in thin trading. U.S. gold futures rose 1.3% to $1,849.50 per ounce. We will now look at the top news in the agricultural. European wheat prices started the new year in negative territory on Monday, pressured by expectations of more tough export competition from Russia, but activity was thin with U.S. markets still closed for a public holiday. Benchmark March milling wheat on the Paris-based Euronext, unofficially closed down 0.3% or €1.00 at €308.25, $328.53 a ton. Sovcon, a leading Black Sea agricultural markets research firm, increased its 2022-23 Russian wheat export forecast by 0.2 million tons to 44.1 million tons on Friday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.